A black gold bounce back. Oil giant BP reports bumper profits of $2.8 billion as the price of oil recovers from its pandemic lows. And shares in the Chinese tech companies tank after state media describe video games as spiritual opium. Hello and a very warm welcome. You're with World Business Report and I'm Sally Bundock. So we are talking about BP. It was expected to do well in the second quarter and the oil giant didn't disappoint. Just reporting it made $2.8 billion in profits thanks to higher oil and gas prices. And that is better than most analysts were predicting. So the oil giant's also upping its dividend by 4% and ramping up its share buyback program. It all sounds like good news, doesn't it? But is there maybe a dark cloud out there somewhere? Well, let's talk to Fiona Chincotta. She joins me, senior market analyst from City Index. Nice to see you, Fiona. So, as I say, all the numbers look good for BP, but we would expect that, wouldn't we? Because the price of oil has been surging in recent months.
That's correct. So oil has had a really stellar year. We've seen the price of oil rebound over 40% so far this year. So expectations were high going into these earnings. As you said, BP did smash expectations. They came in at 2.8 billion against 2.06 billion forecast. And so there's also been good news for investors. There's been an announcement of increased plans for share buybacks. Dividends are also expected to increase. And this is something that we've seen across the board as far as oil companies are concerned. It's sort of an attempt to try and reassure investors, because whilst we've seen the oil price charge higher so far this year, the share prices of these big oil giants hasn't increased at the same rate. For example, BP has just increased 15% so far this year, and that's after falling 47% last year. So we're not seeing that same demand sort of return for the shares, and that's probably because there's a good deal of skepticism over the this transformation towards greener companies that these huge oil giants are trying to achieve over the coming decade.
Well, that's the big issue, isn't it? Because although it's doing well right now, and as you say, it's increased its dividend, it's announcing share buybacks, all the reasons why the BP shares will go up today, the long-term picture is not so easy to predict, is it, when it has to invest heavily in new energy technology?
That's right. It's an expensive transformation that these companies are going to need to take part in. It's an expensive transformation that they will need to do successfully in order to survive and evolve into these green machines that they need to become, as sort of, particularly if we think about the climatic changes and the disasters that we've seen this year. I think it makes it all the more present for investors as when they're sort of looking to invest in companies and where to put their money. And I think without turning into these green machines that they need to become, they're going to continue to lose the sort of demand for the shares that they have seen in previous years. So it really is key that they start to reassure investors that the transformation program is on track and it is actually going forward.
OK, Fiona, thanks very much indeed again today. And just to say that BP shares will begin to trade on the London FTSE 100 in less than 15 minutes' time. So we'll see reaction then on the markets. But now let's talk about shares in the Chinese tech companies, which fell sharply earlier today. This was following state media describing video games as spiritual opium. So Tencent, which is one of the world's largest tech companies, saw its share value fall by more than 10% at one point earlier in the session during the Asian trading day. Well, let's talk to Nick Marsh about this. He's following this story for us in Singapore. So, Nick, once again, big tech names in China being battered, as it were, on the markets. Talk us through what's going on.
Yeah, well, this all stems from an article which was published in the Economic Information Daily. It's a business newspaper affiliated to Xinhua, which is China's state-run news agency. And in this article, they basically said that more and more teenagers in China were becoming addicted to online gaming, and that something ought to be done about it. There ought to be some curbs put in place on the online gaming industry. They specifically mentioned a game called Honor of Kings. They said that games like this had the potential to destroy a generation. They use these phrases like spiritual opium, electronic drugs. But what's interesting is that this article has now been deleted. There's no link to it online. So it's in the physical newspaper, but you can't see it on the internet, because the article had already had a big impact on the markets already. Tencent, like you mentioned, was down about 10%. But since the article has been removed, they've recouped about half of their losses. The same goes for one of their rivals, NetEase, as well. And I think really this just shows the power of the Chinese government to move markets by either cracking down or, in this case, possibly not cracking down. I mean, last week we saw the government banning online tuition, all private tuition outside of schools, which decimated stocks in education companies. You have the case of Didi, which is currently under investigation for alleged misuse of personal data. That's wiped millions off their share price in New York as well. And I think really the reality for investors at the moment is that if Beijing doesn't like something or it wants to change something, then it won't hesitate to act, and act quickly. And this sort of thing tends to get people nervous, as we've seen today.
All right, Nick, thank you very much indeed. Tencent, seriously volatile session for that company today in China. Now let's talk about the Australian airline Qantas. It's standing down some 2,500 staff for at least 2 months. This as the travel numbers slump due to lockdowns in Australia. Let's talk to Phil Mercer, who's our correspondent based in Sydney. Phil, it's just been so tough for Qantas and it's had to take another drastic step.
More trouble for the Flying Kangaroo. Those 2,500 workers will be paid for the next 2 weeks, but from the middle of August for another 2 months, they won't be paid at all. So government assistance will be vital to keep those pilots, those cabin crew and ground staff afloat. Trade unions say it's more devastating news for workers in the aviation industry. They say, the trade unions, that workers have endured 18 months of hell. It's very difficult for them, very difficult conditions for Qantas. Now in May, it was approaching almost 100% of its domestic capacity here in Australia. Come July, it was down to 40%, and that is because of worsening coronavirus outbreaks here in Sydney and surrounding regions. So another sign that COVID-19 is about to inflict more economic damage on Australia.
And in terms of the possibility of Australians being able to travel outside of Australia, I mean, what does that look like at the moment?
I'm not sure what I've done with my passport, actually. So it got to the stage last year, Sally, when Qantas and the aviation industry in general had an absolutely hideous year, that it was rare to see a plane in the sky here in Sydney, Australia's biggest city. Australia banned most foreign nationals from coming into this country in March 2020. And there's no indication when international travel restrictions will be lifted. Worth noting, too, that Australians and citizens and permanent residents wanting to return home face 2 weeks in mandatory quarantine, and numbers in that quarantine system are limited. So in many ways, Australia is still very much isolated from the rest of the world. In terms of domestic travel, we know that for the next few weeks at least, as a lockdown here in parts of New South Wales continues, that domestic travel will be severely impacted as well.
OK, for now, thank you. Phil Mercer in Sydney for us. Let's squeeze in some other business stories. Twitter will collaborate with two of the largest international news providers, that's Reuters and the Associated Press, to debunk disinformation on its messaging site. The news agencies will help Twitter give more context and background information on events which create a high volume of tweets. Twitter hopes this will counteract the spread of misleading information. An official examining of landmark Amazon union election in Alabama has recommended a rerun. Amazon appeared to have stopped a union from forming winning a vote on the issue by a margin of 2-1. The Retail, Wholesale and Department Store Union alleged Amazon had illegally pressured its workers. Amazon says it is planning to appeal. So a very quick flash of financial markets. It's been a bit of a torrid 24 hours, actually. You can see everything is lower, including the price of oil down by 1/3% following a 3% decline for the price of oil on Monday. Pessimism about the Delta variant spreading is seeming to be hanging over markets at the moment. I'll see you soon.